What's happening right now through Bitcoin and crypto could shock the majority of the market. Today's video, I want to show you how and why so that you can prepare to avoid the shock in order to get into the market, or at least better position yourself in case you are still waiting for lower prices or you're just not ready yet. So make sure you hit that like and subscribe button. We have a mass of info to get through today, plenty of charts as we follow the facts and the data, looking at the charts, looking at the specific data points throughout the markets and the macro cycle on your home of macro cycle analysis, where we study the past, forecast the future. So as I said, hit that like and subscribe, plenty more coming up. Now, link in the top of the video description for our free crypto and economic report. It just came out this week. Make sure you check your email inboxes. And if you want to get the next week's free report, make sure you hit that top link right there to subscribe. All right, let's kick it off with something a little easier so that you don't feel so threatened, FOMO, FUD. Just think about, in your worst moments, you are not Cathie Wood. Cathie Wood, probably one of the worst money managers that we have seen in our times. She dumped this token, or this stock, sorry, PLTR, out of her top 20, only to buy back 2 million shares, roughly about $40 to $50 million at a 30% increase. This is where she's selling, this is where she's buying. Use this as a lesson to not be Cathie Wood. So if we ever hear about Cathie Wood's targets for Bitcoin or cryptos or whatever, just remember she is one of the worst money managers that we have seen in our time. She sold Coinbase at low prices, bought it back at high prices. She's done it over and over again. So it's a bit of a pep talk early on in case you are feeling that FOMO or FUD for your own positions on Bitcoin and of course cryptos, as we see Bitcoin beginning to rise, breaking through that 50% level. Now I'm going to come back to this because we have more macro stuff to get through, especially as the S&P 500 hits a new all-time high price and it crossed over 5,000 points for the futures contract, so the E-minis futures. This is pretty big news. It's a very significant psychological level. If you remember back again to 2023, even 2022, it was almost as if the S&P could never make it back to 4,000 points. Remember, this is where 4,000 points was. We saw it collapsing in late 2022, and the majority of the calls were for the S&P 500 to go below 3,000. And many well-known analysts and pro traders and so on were looking for these markets to go back and test the COVID lows. Now, we are so far away from that, it's crazy, but it brings up another very, very interesting point. Look at the speed of the move out of the COVID low. The worst pandemic we have seen in 100 years, the most amount of fear the market had seen in a very long time, and this was global at the same time. Basically, everything else collapsed at that point, the exact time, and then the spring out of that low. Now, this white line that I've drawn right here is the speed and time out of the current move from the October low. You can see from that October low to the top, that is how fast the market is moving. It's moving at relatively a similar pace from the COVID crash to where it pulled back in June to basically that higher low before the market took off again to September 2020. Now, at that time, maybe most of us have forgotten by now, we had COVID, and then we had the second strain and the third strain, and all these strains, that's all people were talking about on the way up to try and crash the market because it was the most fearful thing at the time. And so every time one of these new variants or strains or whatever was coming out, it was just enough to pull the market back, put in a higher low, and then the market continued on to the upside. Think about the speed of that move. Eventually, we'll have to get a correction. I know I've been saying that for some time. At the end of the day, if you are just following the trend, following your Gann swing indicator, there is a link to that, top of the video description, 7-day free trial to learn how to use that. You can see that basically we've been very well in line with the trend to the upside, even though we are anticipating some sort of pullback. These markets always have to pull back, but if you are trading them, just follow the trend. Now, I've got some other data to get into where we're looking at some of the warning signs, at least for a temporary top and a pullback, that I want to get to in just a moment. But essentially, just looking at that speed, it's phenomenal how fast it's going. So I'm just leaving that as a little bit of a warning because of the speed, the pace, and the time to that move. Eventually, even if it just pulls back and goes sideways for a period, that's what has happened out of the most significant collapse we had seen in many years. And of course, the biggest fearful point that we had, which was the COVID crash. For the other white line here, so the second one right here, this is a repeat of the the banking crisis up to that July top. And so the market is much, much faster than what's going on back there as well. So there are a couple of these things that would say eventually you'll get a pullback. Eventually you'll at least see some sort of consolidation. Let's just wait and see if we can get to at least a similar sort of timing to what happened last time. And that timing brings us out to around mid-March. So keep an eye on that for the S&P 500. Now, in terms of the macro cycle, another quick look at this. This is the 18.6 year cycle, as some call it the 18 or the 19 or the 20 year. It's in that realm of the cyclical numbers around that 18 to 20 year cycle that we see very significant turns and corrections. Now, the stage that we are in within that cycle, the 18 to 20 year cycle, is basically coming up to this final big blow off top, but we're not there yet. It's not 2024. We suspect it's going to pump even harder into 2025, and it might come to a conclusion sometime around 2026 for real estate and the economy, potentially. And listen very, very carefully, because these are two different things, but two different things of the same thing, if that makes sense. The stock market, we're all looking at the stock markets here. They may continue higher. That's what I'm going to say about those. It doesn't mean that we're going to see a collapse in 2026. It just means that these markets still have some more time, and to look for some sort of peak around that time in roughly the first half of 2026, or even we'll check it out for late 2025, because I think things are going to get very, very hot and fast. And we're seeing that in real estate now. Even though many are praying that property prices come down, it doesn't seem that way. There are a couple of more reports here from, I think it's Fannie Mae. Americans haven't felt this good about the real estate market since 2022. You might feel a bit different about it. I'm just reading through some of the headlines here, but the headlines are from the report, and we want to make sure that the data stacks up to what the headlines are saying. Remember what we always say about the news. It can basically pull the data any which way it wants to give you the headline that you may or may not want to see. So just looking at the report itself, Fannie Mae, Freddie Mac, you guys got some crazy banks over there in the US. We can see additionally an all-time survey high. 36% of respondents indicated that they expect mortgage rates to go down in the next 12 months. 28% expect them to go up. 35% expect rates to remain the same. So on top of those interest rates, the Fannie Mae Home Purchase Sentiment Indicator, HPSI, increased 3.5 points in January, its highest level since March 2022, due primarily to increased consumer confidence in job security. So people are feeling more confident in their jobs. We can see that from the data itself, that unemployment is quite low at this point in time. They feel a little more secure in their jobs. They may feel better about home prices themselves, like they could get into the market, but they're not feeling overly confident in being able to buy the real estate market because of how high the prices are. So they're two of the same thing, but different things. If you're not feeling like you can purchase it, but the prices are going up, eventually most people flip. That's what we see in every single market all around the world. Cryptos, Bitcoin, stock markets. You're thinking this thing is too damn high. How is it going any higher? Remember, we've spoken about this for months. That's why I always come back to subscribing. I know it sounds like a broken record, but it's to get a feel for what's going on in the market at the time. How in flipping whatever can these markets keep going up? And eventually people flip at the worst times, and they buy at the worst times basically as the market is pushing up into higher and higher peaks, which is how this cycle continues on. And we're probably going into this stage of the cycle where things get hot and heavy. People start doing stupid things with their money. Job security is great, and they feel like they're going to miss out on ever being able to own a home. This happened back in 2005, 6, 7. I was in the market then. Maybe you were as well. And everyone thought this market was not going to go down. And what did it do? Well, after a few years, the market collapsed. In the US and UK, a lot worse than Australia. I'm not saying that Australia is going to do better this time? We just don't know. So there is the data and the headlines, even for the UK. UK house prices gained momentum in early 2024. British house prices rose by 2.5% in the year to January, the strongest annual growth rate for a year. I have heard several comments from you guys in the UK saying that your house prices have gone down. The data is suggesting otherwise. I would pay particular attention to the individual markets that you guys are currently in, but just looking broadly here, which is exactly what we're doing for the overall cycle, definitely looks like we are in these hot and heavy times. It's go time for this everything bull market, this everything bubble. So stay safe with your investments. Don't get too crazy. Now, to try and squash some of those ideas out there as to why the market is going up, we hear often that it's only going up because of credit card debt, or we hear it going up because of something else that's going on, which we tend to cover here quite often. Whenever I see those pieces of data or headlines telling us that the market is only going up because of this, let's go and try and find the data itself. So in this case, we're just going to look at the credit card debt now to see where that credit card debt is. Now, credit card debt as a percentage of available credit. So all the credit that's out there, credit card debt as a percentage of that is only 1/4, 24%, right back to the pre-COVID levels. Okay, so pre-pandemic average of 24%. That's where the average was. We're basically right back to that point now. You can see where we are, late 2023, early 24. Basically, credit card debt right there. It's managed to stay around that rating, that percentage, for the last 20 odd years. You can see this goes all the way back to 2003. So it's nothing out of the ordinary. We had it a little higher. We've had it a little lower. You can see it started to run up as the recession continued on. That's what this gray area is back here. We also had the recession there in 2020, but the credit card debt was going down. A lot of money was being printed there. So really, the economy is only growing because consumers are maxing out their credit cards is absolutely false. Now, I am presenting you with a lot of bullishness here as we get into Bitcoin and cryptos, that time to make 20x, 30x, 40x, and it's seeming like the market is holding up much, much better than even I had anticipated. I thought we would see at least a bigger correction here for altcoins. But nonetheless, I do have some data to get through that would suggest that maybe we still have a little bit of time left to see that correction. But longer term, looking towards the end of 2024, I'm still of the view that that is going to see some very significant gains to the upside. We don't go up in a straight line, which is why I'm still cautious because of how long we've gone up for. And we can see in terms of the timing here for the S&P 500 that we could be coming to a standstill within this period over the next sort of month or so into mid-March, as we are currently early February rolling into mid-February. So this piece here, the January barometer, election years. So we're starting to narrow down that specific cycle itself, which is every 4 years, and what happens in January every 4 years. The barometer performance, when January is a positive month, the year 100% of the time has been a positive year. Let's be very cautious with the 100% thing. It's not always the case. In this case, I think it should be. So we'll see what happens in the coming election years. We've got 2024, then 2028. But nonetheless, January was up by 1.6%. Thus, it is looking likely, not guaranteed, but looking very likely that we'll see a positive 2024. When January is down in an election year, it's also seen multiple years that have also been down. Great write-up here from Jeffrey, if you want to go and check that out on Twitter yourself. But nonetheless, that's the basis of this data here. So even if we do see a correction, which is what I'm getting to now, I think the rest of the year is still looking quite positive considering what we have in terms of the data for the election year. Extreme greed is very well getting high there. Again, we barely got out of the extreme greed over the last few months. We've gone up from the fear of October through that low into greed, and we've stayed around greed and extreme greed since November. So 3 months now of greed or extreme greed without any sort of pullback. We can stay elevated at these levels for several months like we saw previously in 2023. You see from about April into August. So that was about 4 months there before it started to pull back. And of course, the peak was in July. You had that month there of the pullback and then it started to fall there. So we are still at higher prices at the moment. But in terms of the greed reading, We've seen previously roughly that 3 to 4 months has been probably that elevated period before we really do start to see it drop off. So maybe it does happen around that March period. Now, there are a few other technical warnings on the NASDAQ which have shown up before. Looking at when this occurs, you do see a drop off. Note that it doesn't necessarily have to be a collapse, but you can see it come at some of these peaks, pull back, and then the markets continue on from that point. You can see that it happened in 2018, you got 2015. Yes, that is the GFC itself, but we're not at that stage yet. We will get to that point, I have no doubts, but I think we're probably somewhere seeing some sort of minor correction. And that was for the NASDAQ, and I suspect the S&P would also do the same thing, considering the top 8 to 10 stocks in the S&P are, of course, tech stocks. So we're looking for that turn, correction, pause, consolidation in the first half of 2024. Now, the US dollar could also play a part in that. We've seen 1, 2, 3, 4, 5, 6 weeks straight up, higher highs, higher lows, barring that inside week right there. It has broken past the 50% level as well. So this is probably, well, could put a pause on things when it comes to the prices on the indices, stocks, etc. We're not seeing that just yet for BTCs. It's also started to push up, which is a good time to get across to Bitcoin right now. As the last video I left you with was a couple of days ago, Bitcoin was stuck in this trading range, and we just saw some of the volume increase. We're about to close today on the Wednesday bar, coming into Thursday at a much stronger gain there, breaking past 50% of 43,800. That was one of the key levels that I said to watch out for in the previous videos, as it was the major 50%. You can see how Bitcoin had been rejected, and now it's starting to break through at this point. The next levels, that top level there at roughly 45,000, because that also comes in at, you guys who love your 61.8, almost dead on to the 61.8 level, which is essentially a rally from the ETF correction low into the 61.8, so $45,000. Now, on top of that, we have this bar right here. Basically, what we're looking at as a change in behavior or change in character. Looking at our Wyckoff analysis, you can see the volume increased dramatically when the market broke down from that point. So that was some of the highest selling pressure that Bitcoin had seen since the bear market of 2022. That's the volume reading right down there. As you can see, if we look at the darker volume readings, it goes all the way back to the FTX collapse. We hadn't seen anything that high since the FTX collapse. And what we were saying the other day about that particular volume is that even though we saw very significant volume, the highest volume we have seen since the bear market, the price has been extremely resilient. And that's why it's going to be very prudent to not get greedy. And I sound like a broken record. I've said that multiple times. Do not get greedy looking to big downside targets for Bitcoin or the altcoins now, as the $38,500 level could be the low for this ETF correction. If not, then we'll be looking to that price again, or roughly around that 37. So maintain the same viewpoint, mid to high 30s for a correction. We may have seen the correction. We still have a little more time, as we've gone through in this entire video, looking towards roughly mid-March as a potential end to this move. Of course, April brings on the halving event. And from that point, that leads us to our timing for the altcoins, those 30, 50, whatever X gains. This is the time now where you could basically throw a dart at almost anything in that top 20, 50, 100 and expect some significant returns. We might be here. Looking back to the previous cycle, we had the run up, the pullback. No, I'm not expecting a pandemic pullback. Please do not get that in your head. I don't expect us to break past those levels. What we are looking at, though, is if we are seeing the pandemic pullback and we see another little bit of a pull just to around that sort of 400 billion when we look at the total market cap, including stablecoins, but not Bitcoin and ETH. And that brings us back to those previous tops. It looks like we've gone through this particular section here. The market has had its low, its cycle low, pushed up to previous resistance, pulled back again to the previous low point, and essentially is just consolidated over that course of time there before breaking out. So if we saw the market come back under those levels, that is a very, very bad sign. If you see anyone drawing lines to come back here, test these old prices, and then go to new fresh highs, it's almost impossible. It's a ridiculous look at the market because structurally speaking, if the markets were to break under the previous resistance levels, which you'd expect become support, that would signify very difficult times ahead because the fundamentals have changed. That means that structure has broken down and the base needs to reform. You don't get breakdowns, consolidations, and then quick breakouts again. It takes much, much longer. Think of a building. If you break the supports, it's going to take a long time to build that support again before the building can get out of the ground and start to build those stories to the upside. So these folks on Twitter, you may have seen them doing ridiculous lines down and then big lines back up. It doesn't happen. It's stupid to look at the markets like that. Now that we've got that clear, hit the like and subscribe. Let's continue on with the area that we're currently in for the market here. So in terms of timing, things are looking like they are running out for this higher low to form. So I think we could be somewhere in the midst of this if we've seen that low in, and maybe we see a higher low form or somewhere roughly around where we were, which then leads us into these stages of the altcoin market. The Bitcoin new all-time high coming in somewhere around the election, maybe slightly before the election, maybe around the election time. That's the end of the year, of course. So your Q3, Q4 of 2024. But along the way for altcoins, even out of this pandemic low, you can see the market climbed, paused, put in a higher low, climbed again, consolidated, climbed again, consolidated, climbed again, consolidated, and that basically built a massive structure to go on that ridiculous bull market to the upside. Absolutely crazy. One big correction here, sort of your 50-60% pullback, and then that final pump to the upside. So if we are in this stage right here, looking towards that first pump, we're possibly somewhere around a year away. So if we're in there, if we look forward to say Q1 of 2025, that could essentially bring us near or to our first peak of the altcoin season. So in my opinion, 2025 is going to look a lot different to what we're seeing now. I think we're going to see some pretty significant moves to the upside. That stage for Bitcoin is building and it's getting there very, very quickly. We can see in terms of the cycle itself, your roughly 3-year move to the upside for the BTC bull market. We are rounding the corner into that second half. Now, I've broken these down into 2 clear halves. You can see the first 18 months, you've got time. You've got time where the market moves up, consolidates, pulls back, moves up, consolidates, moves up, pulls back and consolidates. But after that period, when we hit that second 18 months, the markets tend to go pretty wild. And even like we saw in the last cycle, where we did have that significant pullback for BTC going 50%, prior to that, it was an almost vertical market to the upside. So it's pretty hard to hang on for the ride. So essentially, if we wanted to break these down, this is the easy ride where you're getting time to enter, even if it is at higher and higher prices. Unfortunately, many are going to come later. The second half is basically like your roller coaster. You want to try and hang on for the ride as long as possible, weather these big pullbacks to the final peak as close as you possibly can get. And of course, take those significant 20, 30, 40, whatever X gains that you're looking for from the market. Now, just to shove a dagger into the hearts of XRP souls here, you want to be holding on to something that is going up while the rest of the market is at least going up as well. XRP definitely marches to a different beat, and the beat is basically straight down. XRP against Bitcoin has been straight down during this period where you could see many of these other altcoins going straight up. You got Link as an old altcoin here. If we look at it against its BTC value, it has been climbing. It's been working its way higher on significant volume compared to the downside volume. So pay attention to the charts that you're following. Don't get emotionally involved in these things. For whatever reason, XRP people have got something a little bit loose up the top there, and they just continue to follow coins that are dying off to the downside. They are going to see some pumps, but probably nowhere near as big as the majority of other cryptos. So that's my stab at XRP at the end of this. Sorry if I've lost the viewers on that. I just want you to make the most amount of money you possibly can, and don't get swept up into the narratives of previous cycles. XRP is just going to be around there forever. It's like a fart that just doesn't go away. I don't know why that's the case, but you turn the fan on and the thing just won't leave. Hit that like and subscribe button, and links in the video description for our channel sponsors. Bybit, get your account set up before the markets go ridiculously crazy and you're scrambling to get your funds onto different accounts that have those altcoins that you were looking for. For the Aussies getting your on-ramps, check out SwiftX, link in that video description. I'll see you guys back here at the next video. Until then, take care and peace out.